if I told you there's a single chart pattern that professional traders use to catch explosive moves before the crowd even notice? In today's video, we will break down the flag chart pattern, one of the most powerful yet misunderstood formation in the forex trading. You will learn exactly how to spot it, how to trade it, and how to manage risk so that you can trade profitably and consistently. Stay to the end because I will show you a live example of a flag pattern trade that turned a $50 account into over $500 in few days. Now let's get started. Firstly, what exactly is a flag pattern? Okay, so now you can see the pattern we'll be discussing today, and this is a flag pattern. This is how it look like, and we are going to identify this pattern on a chart, and we're going to learn how we are going to trade it perfectly. Okay, now what is a flag pattern and why do smart traders love it? The flag pattern is a continuation pattern. Okay, when I mean a continuation pattern, it means it forms during a strong trend. Okay, it forms during a strong trend like we have over here. This is the pole of the flag, right? And this is the flag, right? So during a strong pattern, the flag pattern forms. So this pole here is what we use to symbolize the strong trend, a strong bullish trend. Okay, so flag pattern form during a strong trend. So the trend is bullish, there is a high momentum in the market, and then it pauses briefly, and this period of pause is a period whereby you have a short time consolidation. Okay, a short time consolidation, then thereafter the price is going to continue in the same direction. Now flag pattern is a continuation pattern, so you will find it in a bullish trend or a bearish trend. Okay, so when it appears on a bullish trend, it's telling you that the price is going to continue in the same direction. Okay, so flag pattern signifies continuation, it signifies trend continuation. Okay, so it forms during a strong trend and pauses briefly. So the period of pause is the period of consolidation, so it pauses briefly and then continue in the same direction. So the flag pattern looks like a flag, as you can see here over here. This is exactly how a flag looks like. Right now, this is exactly the pattern you are going to be looking out for on your chart. It must consist of the pole and then the flag itself. Okay, now here's the secret. Most traders get trapped inside this flag. Okay, because during this period of consolidation, they might think that price is about to what? To break downward. They might think that the bullish trend has been exhausted and they might be expecting a reversal, and then they might go ahead and place a trade for a sell, but then they get what? Caught in between. So your flag pattern signals a bullish continuation and or a bearish continuation depending on where it appears. Now I'm going to show you how you are going to position yourself when trading the flag pattern so you will not get trapped. Now let's look at the type of flag pattern. Okay, there are two basic types of flag pattern. We have the bullish flag pattern and the bearish flag pattern, and I'm going to show you that. So a bullish flag pattern on your chart should be something like this. So let's say we have price trending on this direction. Okay, so you have your bullish trend. Okay, so you have your high and your lows, your high and your low. Okay, okay, so right over here is where your flag start forming. Okay, so instead of making a new high, it starts consolidating. Okay, so it starts consolidating downward like it's gonna go bearish. Okay, so it starts consolidating downward like it's gonna go bearish. So this is what a flag pattern looks like, okay, on your bullish trend. And then after this short period of consolidation, the next thing you're going to have is a break. out of the zone. Now I'm going to draw the trend line to show you how it looks like, how it's going to look like on your chart. So when you see a formation like this, what you have to do is take out your trend line tool and draw. So let's check it out. Let's draw and see if it forms the flag pattern. Okay, so when I see price like this on my chart, what I do before the break, before this break occurs, okay, let's say I meet price trending in this sideways manner, what I do is I pull out my trend line and then I draw to see if that is a flag forming. Then I decide to position myself. So let's draw with our trend line to see if the flag was actually formed. So you position your trend line over here and then you draw. Okay, can you see that the flag was formed, and this upward trend here is regarded as the pole, right? So okay, so I'm just going to draw use the trend line to draw the pole over there. So right here, you can see that the flag was formed. Can you see that? The flag was formed. So whenever you see this formation on your chart, what you have to do is position yourself and get ready to trade the break out of this channel, okay? This is an example of a bullish flag pattern, okay? So a bullish flag pattern appears in an uptrend, okay? So why a bearish flag pattern appears in a downtrend and it slopes upward. Bullish flag pattern appears in an uptrend and it slopes downward a bit, slightly. It slopes downward, or sometimes it could just be straight, like could just be sideways, okay? Sometimes, oftentimes it slopes downward. Okay, why the bearish flag pattern slopes upward? I'm going to show you an example of a bearish flag pattern. So this is an example of a bearish flag pattern. As you can see, the bearish flag pattern, okay, appears on a bearish trend. You can see we have the bearish trend over here, then we'll have the short period of consolidation forming the flag, then the break to continue on the same direction of the trend. So the bearish flag pattern slopes upward, as you can see over here. Can you see that it slopes upward? Sometimes it could just slope sideways, okay, but oftentimes it slopes upward. Okay, so that is how to identify the types of flag pattern. So the bullish flag pattern and then the bearish flag pattern. Now let's talk about the technical breakdown of these patterns. So the bullish flag pattern indicates continuation of a buying momentum, okay? So what do you expect to do in a bullish flag pattern is to get ready to buy the break out of the flag. While the bearish flag pattern is a continuation of a selling momentum. So whenever you see a bearish flag pattern, what do? You get ready to enter a trade to sell and make massive profit. Now, another characteristics, another thing for you to identify a flag pattern is that during the formation of the flag, okay, now right here, when you have this bearish downtrend, okay, when you have this bearish movement, the momentum will be high, the volume will be high, but during this period of consolidation, the momentum reduces, okay? What are the characteristics, what are the features that you use to identify that the momentum in a price chart is high or is low? Okay, the one of the feature you have to identify is that when the volume is high, momentum is high, you will see large candle bodies appearing, okay? You see large candle bodies appearing over here, okay? But during the time of low momentum, the candlestick bodies here, they are going to be short. They're going to be short, okay? They're not going to be large, they're not going to be long, okay? So that is a feature for you to identify that the momentum is high or is low. Okay, now coming up next, I'm going to show you how to identify a valid flag pattern versus a fake one. This is where most traders lose money. Don't skip this part. If you're getting value from this video, I want you to smash the like button, subscribe to this channel, and turn on your notification bell so you'll be notified when we post many more amazing strategies. Let's talk about how to identify a valid flag pattern. Now, not every consolidation you see is a flag, okay? I want you to take note of this. Not every consolidation you see is a flag, okay? Some consolidation might happen and then it can lead to a reversal instead of a continuation. Okay, let me show you what I mean by that. Okay, so let's say we have a bullish trend like this. Okay, higher highs, okay, and higher lows on our chart. Okay, this place is showing a bullish momentum. Okay, then right here it starts consolidating. Okay, so you come to your chart and you see this period of consolidation. You might think it's going to be a flag. Okay, say you come here and you see you meet price at this position on your chart, you might think it's going to be a flag. Okay, you might think it's going to be a flag, but what happens next is going to differentiate it if it's a flag, if it's a valid flag or a reversal. So what you have next should come crashing down like this. When it crashes down like this, it's obviously not a flag. Okay, a flag can only occur when it results in price continuation, in trend, when it results in trend continuation. So if it doesn't cause trend continuation, it is not a flag pattern. So to trade profitably, you must confirm the pattern using what? Structure. The structure should be that of a flag. Okay, you should also confirm using momentum and then the context. Okay, now let's check out the points. Let's outline the points to say that a flag is valid or not. Now the first thing to look out for is what? A strong pull, appearance of a strong pull. Okay, so there must be a strong pull like we have here. So there must be a strong what? Bullish trend. That is the pull. So there must be large candle bodies appearing or large momentum in the market. Okay, that's the first thing for you to know. Then the second point for you to check out for is there must be presence of tight consolidation like we have here. There should be presence of tight consolidation, like there should be 4 to 15 candles, 15 small candlesticks, okay, that is moving slightly counter trend. Okay, it should not be moving in the direction of the trend, it should be moving in the opposite side of the trend, like it's going bearish. Okay, now the next characteristics, the next feature for you to look out for to identify that is a valid flag, there must be the presence of a parallel channel or a channel like structure. Okay, there must be the presence of parallel structure or a channel like structure like we have over here. You can see that price formed a channel here. Can you see that? When I use my trend line to draw it, you can see to connect the highs and the lows, it's formed a channel or parallel line. Okay, the number 4 feature you should look out for you to say this is a valid flag pattern is that within the flag over here, you should see decrease in volume. There should be decrease in volume. So the volume should decline. The volume should be different from the volume you have here. The volume right here should be low. Okay, like I said, that the factors that you can look for to know if there's high volume or momentum is that you'll see large bodied candlesticks. Okay, so on your chart, if you look on the bullish trend, you're going to be seeing large body candlesticks, but during the period of consolidation here, you're going to be seeing small body candlesticks. Okay, so that is how to check if there is decline in volume. Okay, now the next factor to look out for you to say that this is a valid flag pattern is that there should be a breakout. Okay, and that is exactly what we have here, a breakout from the channel. There should be a breakout from the channel, and the candlestick that breaks out from this channel will show high volume surge. Okay, it's going to show high volume surge. That means the candlestick is going to be a large body candlestick, not short candlesticks. Okay, so these are the factors for you to consider before you say that this is a valid pattern. Now let's look at this example on a live chat. Hey there, have you joined my Telegram channel? I'm inviting you to join my Telegram channel where I share exclusively educational articles that will help you improve your trading skills. Click the link in the description of this video to join now. Okay, so over here we have the flag pattern. I want to use my trend line tool to show it. So okay, so right here we have the flag pattern. Can you see that? So I will just clone that and just copy it and draw the lows, connect the lows. So you connect the highs and the lows to form the channel. Okay, can you see that? Can you see that now? So that is what our flag pattern over there. Now the strong pole is the bullish trend. Can you see that? So right here is the strong pole. So this right over here is your flag pattern. Now, how did we identify this? We identified this by the presence of what? A strong flag pole. Can you see that? We have the large candlesticks appearing here. Can you see that? Large candlestick appearing before the consolidation. Okay, so can you see that? So we have the strong pole like we have identified, and then the period of consolidation forming the flag. And what happened next was a break of out of the channel, a break out of the channel, and continued in the bullish trend. Okay, it continued the bullish trend. So this is an example of the flag pattern. When you use this pattern to trade, you can grow your account perfectly without blowing it. Okay, so I'm going to walk you through how you are going to get your entries. Okay, I'm going to show you the point at which you should get your entry. Okay, now this is USD JPY. Okay, so the flag pattern, you can use it to trade any asset. You can use it to trade your currency pairs, you can use it to trade your synthetic indices, of course, and you can use it to trade your cryptocurrency. So flag pattern appears anywhere in any asset chart. Okay, so now we have this right here is an example of what? A bullish flag pattern. Now let's check out an example of a bearish flag pattern. Okay, so right here we have the example of the bearish flag pattern. Can you see that? Okay, so you have the strong pole, the strong bearish trend. Can you see that? Then you have your flag, a period of consolidation. Then after that, you have a breakout towards the continuation of the bearish trend. So this is an example of your bearish flag pattern. Okay, and you can see the trend continued being bearish. Can you see that? So the flag pattern serves as a continuation pattern whenever it appears. Can you see that? So whenever you see a flag pattern, just know that the price is going to continue either bearish or bullish depending on where you found the flag pattern. In the next section, I will show you the exact entry and exit rules professional traders use, including how to time your breakout trades for maximum reward. Now, here is how to trade your flag pattern step by step. The first step is to identify the strong pole, right? Which is your strong bullish trend or your strong bearish trend, like we have here. Okay, and right in your pole, your bullish trend or your bearish trend, there should be high volume. That means you should see large body candlesticks, like 3 consecutive or more large body candlesticks. Like we can see here, we have large body candlesticks here. Okay, that tells us that the bearish trend was strong enough. Then thereafter, we are going, the next step is to what? To draw our trend line like I did over here. Okay, so I draw my trend line like I did over here. Okay, then I wait for the breakout out of this trend line. I wait for when price is going to break out of this line. Okay, so anytime I see that price has broken out of this zone, okay, the breakout candle should be a high momentum, a candlestick. Okay, it should be a large body candlestick, like you can see over here. If you look right here, just within this range, you can see that the candlestick bodies has been short. Okay, but right when it was time for it to break out, you can see the appearance of large body candlestick. That is to show you that there is now a high selling power. And when you look at that candlestick that broke the line, let me zoom in. When you look at that candlestick that broke the line, can you see it? Can you see that is a large candlestick body? So when do you take this trade? You wait for this very candlestick to close. When the candlestick close, you open up your trade right here, okay, on the appearance of the next candle, and then you ride massive profit. When you follow this exact strategy, you'll be able to grow your small accounts to massive profit within few days. So this exactly is your entry point. I'm going to go over to my illustration board and show you where to enter, just as I've shown you on the chart. Okay, so like I said earlier, so how do you get your entry? You enter right when the candlestick that broke the channel closes. Okay, so you put in your position right when the candlestick that broke the channel closes, and then you buy. Okay, then you put in your stop loss below the wick of the candlestick. Can you see that? So let's go and check it out again on the chart. Okay, so right here, an example on the chart, this is a bullish flag pattern. Okay, so right when the candlestick closes, okay, that's when you open up your trade and then you buy. Okay, now you can wait for a retest of this channel. Okay, like right here we have a retest, so there are two ways you can enter. Either you wait for a retest of the trend line, okay, of the broken channel. Okay, either you wait for a retest before entering, or you enter aggressively just immediately after the candlestick that broke the channel closes. Okay, but right here the example we have here is a retest, is break and retest. Okay, it broke and then it retest again, it retests the trend line before continuation. But on the example of the bearish trend is an aggressive entry, there was no retest. Okay, can you see that? So you enter two ways: either you wait for a retest or you enter immediately after the candlestick closes. Let's check the bearish trend. You see there was no retest, you had to enter aggressively. Okay, so even if there is going to be a retest and you entered when the candlestick broke, okay, your stop loss is right here. So even if there is going to be a retest, you're not going to get stopped out, okay, because your candlestick is right inside the channel, so you're not going to get stopped out. So it's just going to retest and continue, and you make massive profit. Now let's check the bearish flag pattern. So here's the bearish flag pattern. You can see that there was no retest over here. There was no retest of the broken trend line, so you have to enter immediately the candlestick closes. Okay, you put your stop loss over here and then you ride massive profit. This strategy is very, very effective, and this is what the smart traders use to make massive profit. So if you want to grow your account from small capital to a large profit, this flag pattern is the best pattern you want to use to grow your account. Okay, so while you trade, you want to manage your risk. Okay, risk management is very, very important. So when trading the flag pattern, you have to risk only 1 to 2% of your capital, okay, per trade. And also you should also have it in mind and accept that not every flag breaks perfectly. Okay, not every flag breaks perfectly, so do not expect to have a long duration of profits. Okay, do not expect to, it might just be a short time break and then it just reverses. So not every flag pattern breaks perfectly, so have that in mind. And also you should only focus on setups that meet all criteria. Okay, focus on only setups that meet all criteria. That is, there should be strong bullish or bearish trend momentum, then there should be a short period of consolidation forming the flag, and then there should be a breakout. These are the criteria that you should trade. Only these criteria are what you should trade. Now, before we round off this lesson, I want to show you that you can use this strategy to trade any asset. Now, this is your USD JPY, your currency pair. So we're going to check out your synthetic indices if actually you can trade with this pattern. Okay, so this is your volatility indices. This is VIX 50. This is volatility index. Okay, and you can see flag pattern occurred here. Can you see that? Flag pattern occurred here also. Pull out your trend line, mark it out, and then wait for the break. Okay, can you see? Wait for the break of the channel, and the candlestick that broke the channel should obviously be a large body candlestick. There should be momentum, there should be high volume. Okay, so when you see that, you enter and you make massive profit. And this is volatility index. Let's check out another asset on your synthetic indices, and that is boom and crash. So let's check out boom 500. Let's see boom 500. Okay, so this is boom 500. As you can see, we identified the flag over here. Can you see that? We identified the flag over here, and when you look at the point at which the channel was broken, you can see the appearance of a large body candlestick. That is to indicate that there is a high buying power, and what happened next was the continuation of the bullish trend. Okay, so if you found this tutorial valuable, smash that like button, subscribe, and comment flag master below if you are ready to try this strategy this week. Trade smart, stay consistent, and remember that one pattern mastered is worth more than 10 you barely understand. Till I come your way again, thank you for watching. Bye.